Carried on February 26, 2022 without firing a single missile, the West severed Russia from the global financial system. Not by bombing a building, by sending a message. A message that said you are no longer allowed to use the network that connects 11,500 banks across 200 countries and territories. The ruble fell 30% in days. The central bank doubled interest rates to 20%. Russians queued at ATMs, and none of it required a soldier, a sanctions inspector, or a court order. It required access to one acronym SCIPS. SCIPS stands for the Society for Worldwide Interbank Financial Telecommunication. It is based in Belgium, incorporated under Belgian law, and governed by a board with representation from its member banks. It does not hold money. It does not lend money. It does not process payments. It does something far more foundational. It sends the messages that tell banks to move money. When a German importer pays a Vietnamese supplier, when a Japanese bank settles a bond trade in London. Carried when a commodity trader buys oil in dollars from an Abu Dhabi counterpart. The instruction that triggers all of those movements travels as a SWAFT message. Every message has a standardized format, an authentication code, and a traceable chain of custody. Without that message, the trade does not happen. In 2024, member institutions sent an average of 53.3 million SWAFT messages per day, according to SWAFT's own traffic statistics. Across the year, the network facilitated approximately $150 trillion in cross-border payments, roughly 1.5 times the entire global GDP. The US dollar accounted for just over 50% of all SWAFT payment messages in early 2025, according to SWAFT's own tracker data. The euro held around 22%. The Chinese renminbi under 5%. Every time dollars move internationally, they move on this network. But SWAFT is only the messaging layer. The actual settlement of dollar payments runs through a separate system in New York called CIPS, the Clearing House Interbank Payment System, which processes roughly $1.8 trillion every single business day. Together, SWAFT and CIPS form a two-layer chokepoint. SWAFT sends the instruction, CIPS moves the money, and both of them sit inside the dollar system's jurisdiction. Has been weaponized before. In 2012, under EU regulation, Iranian banks were disconnected for sanctions violations. The first time the network had ever been used as a geopolitical instrument. Some were reconnected in 2016 after the nuclear deal. The precedent was set. In March 2022, 7 major Russian banks were cut from SWIFT. Additional Russian institutions were added through 2022-2023 and again in 2025 when the EU expanded the ban under revised Council Regulation 8033/2014. Russia's largest bank, Sberbank, remains cut off. Gazprombank remained connected longer because European energy payments passed through it. A loophole that illustrated the leverage SWIFT cuts in both directions. SWIFT's reach as a weapon became fully visible in 2022 precisely because it had already been tested in 2012. The Iran precedent told the world what disconnection meant in practice. Every bank, in every country, updated its risk model accordingly. Russia's response was to expand SPFS, its domestic messaging system, now used by banks in more than 20 countries, and to route trade with China through the yuan and CIPS, China's cross-border interbank payment system. As of 2024, carried over 90% of Russia-China trade settled in local currencies, according to Kremlin data. Connected roughly 280 institutions across 103 countries by mid-2025, and China has gone further. In April 2025, it launched CIPS 2.0, integrating the digital yuan directly into its cross-border payment infrastructure. A parallel project called mBridge, linking the central banks of China, Hong Kong, Thailand, the UAE, and Saudi Arabia, has now processed more than $55 billion in cross-border transactions, all settled in central bank digital currencies without touching the dollar system at all. The BIS, which helped build mBridge, quietly stepped back from it in late 2024. The renminbi's share of global trade finance messages on SWIFT reached around 6% in 2024. These are real gains, but in perspective they remain small. CIPS processed approximately 175 trillion yuan in a full year of operations. At current exchange rates, that is roughly $24 trillion. SWIFT moved $150 trillion. The alternatives exist. They do not yet compete at scale. The choke point runs deeper than the messaging layer. SWIFT's power is inseparable from dollar clearing. Dollar transactions must ultimately settle through U.S. correspondent banks, and those banks follow U.S. Treasury and OFAC instructions. This is why secondary sanctions are so effective. A bank in Singapore that processes a payment for a sanctioned Russian entity does not get cut from SWIFT directly. It gets warned. Do this again and you lose your dollar correspondent relationships. Lose those, and you lose your ability to serve any client who trades internationally in dollars. That is not a regulatory risk, it is an existential one. The entire global banking system enforces dollar sanction because the alternative, losing dollar access, is too catastrophic to contemplate. And the network itself has shown it is not immune to attack. In February 2016, hackers compromised Bangladesh Bank's CIPS credentials and sent 35 fraudulent transfer instructions to the Federal Reserve Bank of New York, attempting to steal nearly $1 billion. 5 instructions got through. $81 million was moved before a typo in one message raised a flag and the rest were blocked. U.S. prosecutors later linked the attack to North Korea's Lazarus Group, the first confirmed case of state-sponsored financial cybercrime through the WIFT network. A typo saved $850 million. The network's strength is its universality. Its vulnerability is the same thing. What would it look like if WIFT stopped working? Not sanctions, an actual failure. The network has never had a full outage. It runs on redundant systems across multiple data centers in Europe and North America. But a catastrophic cyber attack, an infrastructure failure, or a decision to fragment the network into regional blocks would not just slow payments. It would freeze them. Letters of credit supporting agricultural shipments would go unconfirmed. Oil cargoes at sea would have no settlement pathway. Banks unable to confirm overnight positions would halt interbank lending. The 2008 financial crisis froze credit markets for weeks. A SCUFT disruption would do the same, globally simultaneously, with no central bank able to act as lender of last resort across borders. The world has been building around SCUFT for 50 years. The plumbing runs so deep that no one has a complete map of everything that depends on it. That is not a design flaw, that is the point. A choke point you cannot see is the one you cannot road around. SCUFT is not just a messaging network. It is proof that the most powerful weapon in the world does not need a warhead, it needs a switch, and someone with the authority to flip it.